right, on to money matters now. South Africans will get a snapshot of how the economy is performing when the first quarter GDP results are released later this morning. The country's economy grew by 4.9% overall last year, boosted by a post-lockdown recovery and a boom in the mining sector. South Africa has also struggled, though, with low growth for over a decade now, often with the population growing faster than the economy, at least if you look at the year-on-year figures. Let's give you a bit more context on this now. Bring in our reporter, Kopano Gumbi, who's watching this development live to us from Sandton this morning. And Kopano, there is optimism that we'll see a fair amount of growth. However, that optimism is met with those who are still worried that it's still on single-digit growth. Certainly a far cry from what we need if enough people are to be pulled out of the economic doldrums, as it were, in this country.
Absolutely, Ayanda. Muted growth, or muted positive growth, as some analysts would like to call it. With growth in the 1% region or so, it is not enough to, as you mentioned, bring us out of some of the more difficult crises that we have in the country. Our GDP growth in the last decade has tracked almost on par with our population growth. And so if you're not having an economy that's growing as fast as your people are adding to your economy, it does present challenges that we see here: stagnated growth, high unemployment, and all these other challenges we face in the economy. But on the positive side, at least, our agricultural sector continues to be a shining light through all of the difficult times that we've had. Not only do they provide food, but they contribute significantly to employment and to our country's taxes and GDP. But just to give us a little bit more on what's happening in the agricultural sector, what we can expect in this first quarter, I'm joined now by the senior agricultural economist at FNB, Mr. Paul Magube. Paul, thank you for your time this morning. What are your expectations for how the agricultural sector has performed in this first quarter?
Thanks for having me. The first quarter was characterized by disruptions, as I would say it. We first had, heavy rains, washing out of crops, and then we had the KZN floods that impacted on the sugar industry and the broader, logistics network for the exports of agricultural produce. But be that as it may, we still produced, expect to harvest a relatively good crop relative to, the 10-year average, especially for maize, for example. We are expecting, good crops from the fruit side in terms of the citrus harvest that is, currently, underway. Already for the first quarter, we saw a 6% quarter-on-quarter growth in export revenue, despite those challenges. So we in line with the muted growth in overall growth, we expect the agricultural sector not to be that strong relative to the past quarter, but still a positive growth, just above closer to 2%, growth quarter on quarter in the first quarter. So it's in those lines in terms of the challenges that we faced that has actually constrained the sector. But from a production perspective, excellent season, good crops. I mean, maize is about 14.9 million tons of maize that is expected. We consume about 11.8 million tons, including exports, which means closer to 3 million tons carryover stock that is available. So we're still in a surplus here. And if you look at the expectations going forward into the new season, we expect that the carryover of the conditions last year. The forecast indicated that we are still in a La Nina phase. Although the strength differs, it might be a mild La Nina situation, which means we still have potential to have normal to above normal rainfall conditions. And if that manifests, it's going to be a third year of robust agricultural output in the country. So we still agriculture is still pumping despite those challenges.
You mentioned those interesting challenges, and I want to ask you about the most important for South Africans is the increasing food prices. Now you tell us that wheat is doing very well and that we are producing enough to feed the average South African, and yet in average households the prices of those essential goods, wheat, bread, oil, continue to increase. Is there any way, how do we ask South Africans to reconcile the economics with their day-to-day lives?
Yes, definitely. If you look at it, mostly imported inflation on the consumer. If you look at it, our grains are mostly exposed to the international market, therefore an import parity based, and therefore the increase in prices on the international market, despite our bumper crops, have an influence on domestic prices. If you look at it as well on the consumer side, we see increases in energy costs, fuel costs at record highs, and that is a major influence on the increase in food prices, despite this bumper crops that we are experiencing at the moment. And if you look at it at farmer level, the cost pressures are also mounting. Increases in fertilizer prices, shortages of fertilizer globally and domestically, and higher crude oil prices have necessitated the increase in the in the agrochemicals, that is your herbicides, your pesticides, which are derivatives of crude oil, and therefore the whole raw input complex for the agricultural sector actually increased. So farmers are not necessarily making huge profits. It's just that commodity prices are high, but cost pressures are actually mounting for farmers. And we also saw recently the hike in interest rates, and the cycle is actually on the upside, which means that the debt servicing costs for farmers are going to actually increase, which will actually result in the situation where farmers margins are relatively squeezed. But fortunately, we have a resilient agricultural situation, and if production conditions are favorable, we're still going to see a situation where there is a response to that situation, and we will still sit with a surplus situation in the country. We have to sort out other things that have to do with creeping inflationary pressures that are actually hitting the consumer at the moment.
It sounds like consumers are in for a little bit more pain as the year continues, if we consider all the natural and external forces that are creeping into our base. What do we forecast for agriculture in the upcoming months?
We expect a robust performance from the agricultural sector in the coming months. The first quarter is naturally your low activity month. We are now into second quarter, into high activity month in terms of the harvesting of crops, relatively bumper crops at the moment. The fruit season also expecting very good output in terms of the harvest. We are going to see a further increase in exports. The demand is relatively good at the moment, strong demand for our fruit commodities, and also on the maize side in terms of exports, we have seen almost a structural break in the trend of the exports, quite robust at the moment, up 17% so far year on year in terms of the pace of exports from the country. So going forward, we expect a rebound in the agricultural output in GDP terms.
And lastly, if there is as robust an environment for the agricultural sector as you mentioned, can we expect the employment situation in the sector to follow in a similar line?
Yes, if you look at the recent employment numbers, a slight uptick there, and obviously increased output in the agricultural sector follows through with increased in employment in the sector. But I think perhaps on a parting note, the question of logistics, the road infrastructure, the network that actually fits the agricultural value chain is very, very critical to be rehabilitated. And actually that will help reduce the cost pressures that are there in the industry, because at the moment it's actually huge costs that the farmers face. If you look at the situation where the port situation, for example, the grape producers have delays in terms of the export of the fruit to destinations. This is a perishable, and therefore shelf life has an impact on the price that you get when it lands overseas, the time period that it takes for you to get there, and the availability of the necessary infrastructure, the availability of the vessels for exports, all contribute to the good performance of the sector. But we are not isolated from the rest of the world. The lockdowns in China, with the resultant bottlenecks on the logistics side, all have an impact on how we perform as a small economy in the rest of the world. Although very critical, economy in Africa and a very second biggest one after Nigeria. It is very critical that we catch all the wheels that oil the value chain, the agricultural value chain on track, so that we can have that performance.
Thank you so much, Mr. Paul Makube, there, just giving us a sense of what we could expect from the GDP numbers, at least on the agricultural sector, or in the agricultural sector at least, I should say. There is some good news. Back to you in studio.
And good news is definitely what we need, don't we? Kopano Gumbi, thanks very much indeed for that context. We look forward to those figures being released at, I think, about 11 or 12 o'clock today. We're watching it quite closely, of course, and you can catch that announcement right here on Newzroom Afrika, channel 405. Kopano, thanks. Live to us there from Sandton.